Did you know that a senior citizen can buy a home using a reverse mortgage, keep more of their cash from the sale of their home, and not have to make any monthly payments on the new mortgage? Hi, my name is Kevin Walton. I'm a certified mortgage advisor, and I've been doing real estate loans for over 25 years. And today, I'm going to show you how the HECM reverse mortgage process works. But first, let's quickly cover what HECM stands for. HECM is an acronym for Home Equity Conversion Mortgage. It is associated with the government-backed reverse mortgage program offered through HUD, a government agency. There are several types of reverse mortgages out there, but not all reverse mortgages are HECMs or are federally insured, and they may have different rules than the HECM, so it's important to take note of that. Did you know before viewing this video that you could use a HECM to purchase a home? Most people didn't. Why? Not enough publicity or marketing efforts have been made to promote this option. The AARP and National Council of Aging have been writing about the reverse mortgage program, but just not about the purchase loan feature. There are educational classes available to realtors to learn about the HECM reverse mortgage purchase program, but most of them have yet to take the class. So I'm here to let you know about this opportunity and how it works. There are several advantages to use a HECM reverse mortgage to buy a home. You can keep your existing home for purposes of renting it out and use the HECM to buy your new home. When you choose not to sell your existing home, additional loan underwriting conditions come into play, which we can cover in a phone call. One other advantage of the HECM reverse mortgage purchase loan is that there is no required monthly mortgage payment. You can make one though if you want to. And if you want to pay the loan in full, you may do so without penalty at any time. Also, know that when using the HECM reverse mortgage to buy a home, there's just one loan transaction that needs to be done, no multiple transactions. There are a few unique borrower requirements that need to be satisfied when applying for a HECM reverse mortgage loan. The new residence must be owner-occupied. No rental property can be purchased using this loan. The youngest borrower on the loan must be at least 62 years of age and must maintain the home as their primary residence. If there is a spouse younger than 62, they can reside in the property as long as they like. But a few other lender requirements may exist. Please contact me if this is the case. As of 2015, there is a new borrower requirement. Borrowers have to show the ability to pay property taxes and homeowners insurance in a timely manner for all real estate owned. And if you're looking to keep your existing home and rent it out, you'll have to demonstrate the ability to pay the full mortgage payment on that home as well, even if you're to be receiving rental income. Other consumer-related payments like credit cards, auto loans, are not currently taken into account when qualifying for the loan, making it easier for the borrower to qualify. There are credit requirements for the borrower on the HECM reverse mortgage purchase program. As with any other real estate loan, there can be no foreclosures, no notice of default, deed in lieu of foreclosure, or short sale on any properties owned in the last 3 years. Also, no mortgage delinquency showing greater than 120 days late in the last 3 years. And bankruptcies must be discharged for at least 2 years. Now, how much of a down payment is required on the HECM reverse mortgage purchase loan? Well, it depends on the borrower age, purchase price, existing interest rates, and at times the financial ability to pay the property taxes and homeowners insurance. But typically, the down payment is at least 50%. And again, the remaining 50% is the reverse mortgage loan that doesn't require any monthly payments. If you're keeping your existing home for rental purposes, the lender will make sure that no more than 43% of your income is being spent on the mortgage payment, property taxes, and homeowners insurance premiums. Also know that when it comes to the down payment, no gift funds from relatives are allowed. The funds must come solely from the borrower's funds. Speaking of the down payment, Here's some allowable sources on where down payment funds can come from. They can come from the sale of your existing property, liquidation of a 401k or other investment account, and other liquid assets listed in the borrower's names. A minimum of 3 months documentation is required to verify the funds. Now here's a few sources of the down payment that are not allowed. No second mortgages or home equity line of credit on any other property owned that's used toward the down payment. No collateralized loans. And again, no cash gifts are allowed. Now there are HECUM requirements for the new property that you're looking to purchase. A 90-day property flipping rule exists. Sometimes individuals buy a home in need of repair, get a good deal on it, fix it up, and a few months later resell it. If the home you're looking to buy is one of these homes, it could not have been purchased in the preceding 90 days by that investor. If you're buying one of these properties and it's been greater than the 90 days, and the new sales price is greater than 5% of the prior sales price, a second appraisal is required, and the lower of the two appraised values will be used as the appraised value. If you have any questions on these rules, just give me a call. We can go over them, but they only apply when you're buying a home that's being sold for the second time in a year. All repairs must be done prior to the close of escrow by the seller. No holdbacks. Properties being sold in as-is condition must have any health and safety issues fixed, as identified by the seller or appraiser. Prior to the close of escrow, and must be paid for by the seller. Health and safety issues can be many things, such as flaking paint or a broken furnace. Ask the seller's realtor prior to making an offer on a home if they are aware of any health and safety issues with the property. They must disclose these issues. Prior to starting the HECUM reverse mortgage process, all borrowers must go through a HECUM counseling session via phone. It consists of a discussion with a non-lender affiliated HUD certified counselor that covers all aspects on how a reverse mortgage works. It takes about an hour. This session serves as protection to the borrowers and allows you to ask any questions and all questions that you may have, including questions asked by heirs. After the session, you will be eligible to obtain a HECUM counseling certificate, which is usually good for up to 6 months. The lender will need this certificate to proceed with the reverse mortgage process. To show that there is no lender coercion when obtaining a HECUM reverse mortgage, the borrower must pay for the HECUM counseling session with their own funds. Here's an example of the loan documentation required to complete the HECUM purchase loan: the counseling certificate, the loan application, purchase contract, the property title report, the appraisal, down payment and deposit documentation, and depending on whether you're keeping your existing property or not, additional documentation may apply. So how do you know you're qualified for a HECUM reverse mortgage purchase loan? Give me a call and I will crunch some numbers for you. Borrower ages, down payment, and interest rates are key in figuring the dollar amount you can qualify for, and each individual figure can be different. I can give you a no-cost borrower purchase analysis to view with loan options for you to help simplify the process. All we have to do is have a conversation. There's no pressure here, just information gathering. And remember, we can't officially start the loan process until you obtain the HECUM counseling certificate. Here's a few more notes when it comes to buying a home using a HECUM reverse mortgage. There are no sales concessions allowed by the lender, realtor, or seller. Nothing alluding to a concession can be included on the purchase contract. Not all reverse mortgages are HECUMs. Therefore, they wouldn't be government-backed. It's also important to note that once you sign the final loan papers to buy your home, you can move in the next day. There isn't a 3-day rescission, which exists on refinancing a home loan. So let's do a comparison when buying a home paying all cash versus using a HECM reverse mortgage. First, here's a typical profile of a borrower. The youngest borrower is 70 years of age. Their existing home value is $500,000. The home is paid off, and they want to buy a home for $350,000, and they do not want a mortgage payment on the new home. So this slide is an example of an all-cash transaction using those previous slide figures. So the sale of the home was $500,000. Realtor costs are $40,000. So after the sale of the property, they net $460,000. The new home price is $350,000. So after paying all cash for the new home, they would have $110,000 in their pocket. That sounds good, right? Wait until you see how much more cash you get to keep with the reverse mortgage option. This slide's an example of using HECM reverse mortgage to buy the home, and again with no mortgage payment required on the reverse mortgage. The figures are the same. They net $460,000. The new home price is $350,000, but now they use the HECM for a 50% down payment, which is $175,000. Which means they now have $285,000 to put in their pocket, which is $175,000 more than they got to keep with the all-cash option. Then the remaining 50% of the purchase price is in the form of a HECM $175,000 purchase loan with no required monthly mortgage payment. This loan gives you options since you get to keep so much more money from the sale of your home. We need to mention the new HECM reverse mortgage rules that have gone into effect in late 2014 and early 2015. These new rules are designed to keep borrowers in their properties, and many people do not know about these new rules. Spouses younger than 62 years of age can now stay in the home after the older spouse passes away on loans created after September of 2014. This new rule remedies a sticky point that has plagued the reverse mortgage industry. It's now been improved to protect all borrowers. Several HECM loans have been discontinued, which further simplifies loan choices. This again helps the decision-making process for the borrower. HECM reverse mortgages now make sure borrowers have enough funds to make their property tax and homeowners insurance payments. Before, this wasn't checked, and some properties were being foreclosed on for non-payment of property taxes. Property taxes are the senior lien in the land, and the county can foreclose and wipe out the lender's balance by selling the property and not giving the lender a dime. This issue has been remedied, and now loans made after 2015 have this provision, which protects borrowers. A common reverse mortgage myth is that when accrued interest added with the mortgage balance is greater than the home value, the borrower and heirs have to either move out or pay the difference. This is not true. If the accrued outstanding balance is higher than the home value, the borrowers can stay in the property for as long as they like, as long as it is their primary residence. When it comes time to sell the property, the HECM reverse mortgage comes with mortgage insurance, which will pay off any difference between the home value and the mortgage balance. The reverse mortgage is also a non-recourse loan, which means any mortgage balance difference is not collectible by law. The reverse mortgage purchase loan gives seniors options on how they want to purchase their next home and allows them to keep more of their cash in their pocket when it comes time to buy their next home. My website has additional resources for you to view and read. I have the 25 most frequently asked questions and answers on reverse mortgages, and an additional video that explains how the HECUM line of credit loan option can triple the amount of available funds the borrower can use over the lifetime of the loan. This option is one most, again, don't know exists. I can answer any questions for you, your friends, heirs, and when it comes to the reverse mortgage process, and let you know if this option is right for you. And I have your best interest at heart. My website is www.californiareversemortgage.biz, not .com, .biz, B as in boy, I, Z as in zebra. Feel free to call me or email me anytime, and I look forward to earning your trust and business, and thank you again for watching this video. Bye now.